Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. So the Australian dollar once again tumbles after touching an intraday high around 71.80. As supply increases, it has buckled the technicals and puts a further weight on the support, which may give, that is, around 70.5 and down towards 69.80 and then reassess from there. In economic data, Australia's March survey showed inflation expectations climbing to around 5.2%, up from 5 in February and marking the highest level since July 2023. The RBA, with the official cash rate of 3.85, could see another hike, 25 base point increase when they meet this month, as ongoing energy shocks strengthens expectations that further tightening may be required across major central banks. However, with no major domestic releases locally, eyes will look towards the US data, which is a key point. The personal consumption expenditures price index, or the PCE, which is the Fed's preferred inflation gauge. So looking at the technicals, as I mentioned, market could drop back towards this bottom side of the range around 69.80, and with the top side still capping around 71 to 71.5. Moving on to the euro, well, the market's still heavy and looks towards this key level of 114.60.90. Do take note, if this level breaks, we've got to go to the weeklies because there is a little underneath until around this region, which is around 111.5 to 112. So this level coming in at 114.60.90 is a key point. So be aware if it does break. Trend is strong, but we are a little bit oversold. Dollar yen back into area where the intervention was last seen, or rumours of it. Along with that, the market is still likely to be trying to squeeze out any short positions, but I still feel if history repeats itself, this heavy candle could easily put 155 back on the map if repeated. Sterling, the market still weighing heavily on the support and looks down towards the region, I feel somewhere around 132.5, as we are now into the fourth consecutive down day. A weaker play when it comes to gold, but still respecting this level around 5,000 and still trading within a 5,000 to the level of 5,200. As we get closer towards the trend line underneath 5,000, I do expect strong demand there and eventually see the rally on to the top side of 5,400. And since the rebound from these two bullish candles, a hammer and a dragonfly doji, has supported yesterday's rally, but now getting into a bit of a struggle here. Let's see if we can pull back towards the region around $90 a barrel or down lower. I still think it's overextended, and let's see if the market does buckle and give back some of its gains. Well, that's a wrap. Thank you for joining me. And as always, look out the intraday report, and I hope you enjoy the great start to the new weekend.